Well, that was a great intro for the wrong people. So, unfortunately, not quite as cool as Charles Hoskinson, though Guy may be. My name is Joshua Frank. I'm co-founder and CEO of the TIE, and I'm joined by Guy Hirsch, who's managing director of Etoro US.
Hello, everyone. Happy to be here. A great intro, but we will have to be ourselves for the next 30 minutes.
Yeah, sorry to disappoint, but I'm glad we got all the Cardano supporters in the chat. So and everybody joining us. So hopefully won't disappoint and can still interest you. Yeah, if we can get the PowerPoint loaded up, that'd be great. But Guy, why don't you start by giving us a little background on Etoro and Etoro US and what you guys do?
Sure. So Etoro is an online trading platform. We're a social investment network. We allow people to get access to markets in an easy and transparent way. We allow them to, outside of the US, we are a multi-asset platform. You can trade US stocks, ETFs, indices, commodities, currencies, and cryptocurrencies all on the same platform. And the US office was open in June of 2018. We've launched the platform in March of 2019 with our crypto asset offering. And we've been growing ever since. We do have plans to add US stocks to our US offering next year, but we're all into crypto, and we're happy to be available in the US as well as more than 140 countries outside of the US. The company is profitable, growing fast, more than 1,000 employees. The notional trading volume on the platform the first half of this year was more than $600 billion. So we're on track to do more than $1 trillion this year. And I'm excited to be here and talk about the report together with you.
Yeah, so I run a firm. My name's Josh. I run a firm called the TIE, and we're a leading provider of data to the cryptocurrency space. Primarily, we focus on serving institutional clients, and we focus on social sentiment data and also market-moving information. And one of our core products, which is kind of going to be the subject of a lot of this discussion, is a product called SigDev. And basically what SigDev is the fastest feed for tracking market-moving significant developments. So we built technology that goes out and crawls thousands of sources in real time. We parse through SEC filings, regulatory rulings, court cases, news in China, updates from exchanges, updates from token issuers, et cetera. And what our technology does is categorize and service that information to clients like exchanges like Etoro, as well as publications, hedge funds, token issuers, custodians, law firms in real time. And so what we're going to be talking to you guys about today is what actually moves the prices of cryptocurrencies. Can we get the presentation loaded? I'm not sure if everybody can see it. All right, well, if I'm not sure if anybody can see the presentation, but the first slide, or flipping to the second slide, is showing what SigDevs move the market. And as mentioned before, SigDev is a significant development. And so we basically wanted to look at first, what types of news move crypto markets the most? Crypto is a market and an asset class that's void of fundamentals. And we know that in an asset class void of fundamentals where there's no earnings, there's no revenue, and there's no dividends, crypto really moves on sentiment, and sentiment is a reaction to news. So at the earliest level, we kind of really wanted to see, what specific pieces of information were causing the market to react in different ways. And unsurprisingly, one of the things that we found was that exchange listings in the short term have one of the most, one of the largest impacts on price. The same thing goes with staking and partnerships. But something that we found interesting is that token burns actually had the least significant impact on price over the first 24 hours. And Guy, I don't know about you, but for me, I found that really interesting because with the token burn, it's basically forced deflation on an asset where you're reducing the supply. And so inherently, I would think that would have resulted in an increase in price.
No, I agree. But I think the other findings on kind of which SigDevs moves prices the most over 24 hours, there were things there that weren't that surprising, like listing or partnerships and things of that nature. So I think that maybe there's some surprises with regards to token burns, but I think other things kind of made sense into some assumptions that I had before seeing the data.
Yeah, and so flipping to the next slide, which is which SIG devs are most sustainable. So we know that events like exchange listings move the market really fast. We've seen that time and time again, and I'll show an example here. Like Aragon got listed on, a bunch of the biggest exchanges. The price went up by 185%, and this was a few weeks ago, and now the price is actually below where it was. So even though these events may move markets in the short term, what we cared about is, are these events actually sustainable? And what you can see on the left, with a partnership announcement, for example, is that's what an average partnership announcement looks like. And you can see the days after the event, the price spikes way up and then it crashes right back down. Whereas for things like mergers and acquisitions, new funding activities, and mainnet launches and upgrades, those types of events are most sustainable. And I guess inherently to me, they made sense. I mean, Guy, I don't know if you have a different perspective, but it was interesting to see for me that partnerships were actually the least sustainable events. And the reason I found that surprising is, like we've seen with Chainlink, they partner with Google and they partner with these guys and these guys and these guys. And I think that compounding impact over time has built up price. But in terms of looking at, the next week or the next month after these types of events, they tend to be very unsustainable, just up and down. I mean, I don't know if you have a perspective on why you think that happens or not, but.
No, but I think, much like with, let's take kind of the venture capital world, right? So after there's an announcement on funding of a particular company, whether it's Series B, C, D, E, and so on and so forth, that now there is a much greater chance for that company to sustain itself, to grow, to have a meaningful impact in the market. And so much like with venture capital and capital markets, we see similar patterns here. And so I think these are not surprising at all, but also, I think the thread across this research and this analysts and all the work that you guys are doing over at the TIE is to try to find the fundamentals for this asset class, to try to find the equivalent of capital markets in crypto assets. And I think this is the genesis of such an attempt to find the fundamentals. So as we would do more of these in the next quarters, in the next years, we will start to develop some sort of I would say more of a predictable understanding of what moves these prices, and now we're seeing for the first time something that can give us a sense of what are the fundamentals of this asset class.
Yeah, and I totally agree. And I mean, I think the important thing to note here is in the report, which anybody can find online, if you just Google Etoro the TIE quarterly report, you can read it. It's free. You don't even need to put your email address in. One of the things that we, kind of found broadly is just the fact that this is not so different from the equity market. And kind of moving on to the next slide is a great example of that, which, why does certain exchange listings, as an example, have a larger price impact than others? And this is kind of like, I don't know if anybody saw Tesla getting listed, on the S&P 500, right? And Tesla's, the price of Tesla stock skyrocketing. And also, more recently, like Palantir, having an IPO and getting, it's now available to more investors. What we see is initially following these listings, there are massive increases in price. But moving on to the next slide, something that's important to note is it's all about new users, right? So if what you saw in that last slide was Aragon, got listed on a big exchange. It was never on a big exchange before, and the price skyrocketed. But here, this is Bitcoin Cash getting listed on crypto.com. And we can see there's no price impact. And what we mean by that is when an asset that's not previously listed on a large exchange gets listed on an exchange for the first time that has a number of users, for example, Etoro, which has 15 million users, or Coinbase or any other large trading venue, all of a sudden there's a ton of new potential buyers in the market. But it's not always the case that an exchange listing is going to have a giant positive impact. Like an example is now Chainlink is now on almost every major exchange. If Chainlink got listed another time, it probably wouldn't have that same impact. And Guy, I don't know if you have any comments here.
No, this is exactly the experience that we see at Etoro. If we list some sort of some token, and we're either the first or one of the kind of first few major exchanges to do that, we definitely see the demand. We definitely see the hunger for this new asset. We definitely see the inflows of fiat coming in to try to buy this asset. And so this is not surprising at all. But much like with, I would say, again, going back to capital markets, if there's an IPO and then it's not really the equivalent, but once you have the effect of an eToro listing, of a Binance listing, or one of the major exchanges, then I would expect to see what the data is showing here on slide 5, and that is that the effects are subsiding, that it's not you won't see the same effect with yet another additional listing on some other exchange. It's really the first 1 or 2 or 3 major exchanges that are listing the token and giving it some sort of a validation and distribution, and giving people access to liquidity surrounding this token.
And so moving on to slide 6, the next thing we wanted to look at is what is the probability that these different, significant developments would actually result in a price increase? And something that I found absolutely fascinating, and it's similar to the sustainability slide that we showed before, is that mergers and acquisitions, 90% of the time when there's some form of crypto-related M&A, an example of that was FTX going out and buying Blockfolio, and all of a sudden, a large number of new users are entering the FTX ecosystem and potentially participating with FTT. There's a 90% chance when a token issuer acquires a company or merges with a company that the price of that token will go up within a week, which I found wild. But if we looked at the FTT example, the price of FTT went up by 33% within that week. Something that I found interesting, though, is we talked about token burns not having a huge impact on price, but 100% of the time we've seen token burns resulting in an increase in price over 24 hours, but over 7 days it actually drops down to 50%. So even though we know that token burns but we've seen historically token burns resulting in price increases over 24 hours, over a week, that hasn't historically been the case. I mean, only 50% of the time that's been the case. And one thing which we knew would be the case, and something obviously to be aware of, is the fact that when a token gets 51% attacked, when the network gets hacked, only 20% of the time over a week and 27% of the time over an hour does the price actually go up, and that makes sense because it's a hack.
Yeah, and I think and I hope viewers would agree with us that this is the genesis of really making data or trying to find data that is moving prices in crypto at the hands of everyone, at the hands of retail investors as well as hedge fund managers, and giving people tools to really understand, to be educated on what moves these markets. And as you can see in the table, mergers and acquisitions, funding, things of that nature, and the probability of these announcements moving prices and attaching a degree of probability to it, that is something that I think should be kind of a tool, or at least something for people to look at when they are making investments or getting into this market, in order to be a little bit more educated about the space and a little bit more informed as to where there's alpha in the space.
Yeah, and so moving on to slide 7, this is just another way of looking at it, and this looks at the average 1 week price change for different events. And with M&A activities, again, I mean, the average price impact is 8.23%, right? Positive. And, crypto is very much an asset class that moves on hype, right? It moves on sentiment. It moves on, people reacting to news and information. And oftentimes I think people's reactions to specific pieces of information are misguided. For example, a lot of times people think, a partnership has just been announced. This is going to have this massive impact on price. What we see is within an hour, the average price impact is only about 0.35%. And so it's pretty insignificant. And moving on to slide 8, what we can see, and I brought this up, so we don't need to spend any time on it, but this is the FTX acquisition of Blockfolio. M&A is hot, right? M&A as of now, at least, is having the biggest impact on the market. And, on the other hand, moving on to slide 9, 51% attacks or not. So when Ethereum Classic was hit by their third 51% attack, the price went down by 23%. And so flipping to slide 10, kind of getting through these a little bit faster, the next question that inevitably was, does it matter where this information is sourced from? As I mentioned before, crypto is very, very much a sentiment-driven asset class. So does it matter if the news is breaking on Twitter, or does it matter if it's breaking in publications? And broadly speaking, we found it doesn't actually matter, because usually when something breaks in the news, it will get to Twitter relatively fast. but there were two examples that really seemed to have a huge difference. And they both kind of make sense. The first is airdrops. And an airdrop is when a token issuer will drop a certain amount of tokens into wallets of the community for free. And what we found is when that breaks on social and when there's social engagement there, the price will increase much more significantly. But interestingly, with regulatory news, we found that when that actually broke on Twitter, people are more likely to share negative regulatory news. So on average, when news about from a regulation front is breaking on Twitter, there's actually a much bigger negative price change as it relates to a particular asset. And Guy, I don't know if you have any commentary or thoughts on why that. I mean, that was my first guess on why this happens, but it's I think an educated guess more so than anything else.
I think it is expected. I mean, crypto Twitter has more of a kind of a libertarian bent to it, so I would expect that to be the case. But I'm making a comment kind of outside of the data because it's not being reflected in the data. There are a lot of actually good news that's coming from regulators, in particular U.S. regulators, on that relates to our industry. All sorts of new legislation at the House, all sorts of positive movements at the OCC and the likes that are very, very kind of positive for the industry as a whole. But obviously, in predicting price movements, we need to look at the data and really understand what it means in terms of price movements. But overall, I think in the past few months, we've experienced a lot of good news coming from regulators, in particularly U.S. regulators, and just makes me a bit more bullish about the space as a whole.
Yeah, and so Etoro is, and as Guy mentioned before, the leading social trading network in the world, right? And crypto is a very social-driven, community-driven asset class. So the next question that we inevitably asked ourselves is, okay, this news broke, but does it matter how many people tweet about it following the news? So moving on to slide 11, the answer is tweets matter, right? The more engagement that a piece of news gets, or the more engagement that a coin gets following a piece of news, the larger the potential price increase is. And this is the case for listings, for example. It seems to be that there is a weak linear relationship here between exchange listings and tweet increases. But moving on to slide 12, sentiment matters even more. And what we found, which was very interesting, is there's an exponential relationship between investor sentiment and price change. So when a token gets listed on an exchange, and investor sentiment is basically a quantified representation of investor emotion that we score between 0 to 100. So when investor sentiment is significantly positive, when it's more than 2 standard deviations from the mean, when it's above 90, we found there's an exponential relationship between an exchange listing and a price increase. And I think this makes sense, right? When a token gets listed on Coinbase, or when it gets listed on Etoro, or when it gets listed on any other trading venue, and people are incredibly excited about that, and they become significantly more positive than they historically have been, we can anticipate to see a much larger price change. But my question then for you, Guy, and moving on to slide 13 is, how can you actually use this information?
Right, but actually a quick question, Josh, before we move on.
Sure.
We know that the TIE has this incredible insight into Twitter sentiment. Do you foresee any other kind of social network, either Facebook or Instagram or TikTok, generating the type of insights that you can currently generate with regards to crypto assets in the next few years? And if so, which platform would it be and why?
I mean, I think your point on TikTok is actually kind of interesting. Quantifying investor emotion on TikTok, I can't imagine is the easiest thing. But we saw in the case of Dogecoin, I don't know if you remember a few months ago, where all these Dogecoin memes went around TikTok. These influencers got a tremendous number of likes and the price went up significantly. So I think, TikTok is becoming the dominant social network now. I mean, it's growing significantly. So I think that's an interesting concept, interesting idea. But for the last 5+ years, crypto has been dominated by Twitter. I don't foresee that changing anytime soon. So there's nothing that's on the horizon. I mean, even on Twitter on a daily basis, we're seeing, 60, 70, 80,000 tweets about crypto. And that's a massive sample size for trying to quantify how positive or negative investors are about, a particular asset class. But I certainly think other platforms in other countries, could be interesting to look at as well, like Weibo and WeChat within China. The challenge is a lot of conversations there are happening behind closed doors. And the same thing goes on Telegram, where there's a lot of conversation, but usually the important conversations are happening behind closed doors. And, we've seen that a few times more recently where people are getting ousted on Twitter for trying to pump coins and do different things like that in closed doors Telegram chats, which the industry has really kind of taken the hammer down on. But, moving on to that next piece, that slide 13 on how can I use this information? I mean, I ask you first, how do you think a user can take advantage of this information?
Sure. So our partnership with you goes beyond the analysis. We have launched on Etoro basically an investment strategy. We have an offering called Copy Portfolio, in which you can deposit funds into Etoro and then basically copy the strategy. And every time the strategy rebalances, your portfolio will rebalance as well automatically on a proportional basis. And so we have a strategy that we put together with you that is traded alongside of sentiment analysis. And so this is, I believe, one of the best ways to put this work into action. So if you believe in this research, if you believe in this type of data, and the numbers are there to prove that it's working, then I would recommend evaluating it if this is kind of the right investment for you, and obviously assessing the risk, and then open an account at Etoro and see if this is if this is a good investment opportunity for you. We're also working, as you know, Josh, on 2 new investment strategies that will be available as part of our Copy Portfolio program in the US that will give investors opportunity to trade crypto assets based on sentiment, but not right now. We have kind of a mix of digital assets in the long only strategy. In the 2 new ones, we're going to focus more on a smaller number of crypto assets that we can gauge the sentiment about them. We can gauge the price movements about them in a much more, I would say, in-depth way. And so I'm excited about the launch of these Copy Portfolios. And really, it's also all about reading and understanding. And we're happy to make this and future and past quarterly reports available for anyone to read, and just educate yourselves about this space and try to understand if you trust this data, and if so, as I recommended, a good opportunity for you would be to use the Copy Portfolio offering on Etoro.
Yeah, and I'll just add, a couple of things, right? The first is keep an eye out for market moving information, right? And I think that this is a good reference for understanding how the market has historically reacted to events. And I think a lot of the research covers that. For example, if Bitcoin Cash gets listed on another exchange, or if Bitcoin gets listed on another small exchange, obviously it's different if Bitcoin is getting listed on PayPal and Venmo than if Bitcoin is getting listed on, crypto.com. But, keep an eye out for where that information is coming from. And the most important thing, though, is timing really matters. And we showed that with sustainability of events. Is if you are late to news and information in this asset class, 5 minutes can make a huge difference. 10 minutes can make a huge difference. So when you're deciding, how you're planning on trading, keep in mind how late you are to that piece of news. And being late is not necessarily a bad thing, because just like there's opportunities on the upside, there are also going to be opportunities on the downside, right? With exchange listings, we see this pattern of up and then down, and then up and then down. And we see that with partnerships and a number of different types of less sustainable, significant developments. And it's the kind of thing where I think as a trader on Etoro or on other platforms, you need to kind of be cognizant of what's going on in the market and how can I, take advantage of that information. I think timing is a critical element of it. Not trying to get into shilling what we do, but we obviously have a terminal that gives you this sort of information, fast, in a speedy manner so that you can react to it. And, to Guy's point on just kind of that final slide, we've launched strategies with Etoro. This is the first one, the tide long only Copy Portfolio. And basically that just rebalances every month, looking at unique combinations of our proprietary sentiment data. And since the beginning of the year, that strategy has significantly outperformed Bitcoin, the S&P 500, gold, and other major digital assets after all trading fees. So definitely something worth considering. We're doing the work for you in terms of quantifying the wisdom of the crowd, but also we have a team of data scientists that are basically taking all that underlying data and kind of converting that into an actionable, opportunity and trading strategy.
Awesome. And Josh, so a couple of questions just to wrap it up. The a bit of outlook. So one question that I have for you is, what is your outlook with regards to DeFi? I know we've analyzed this in the previous report, which again is available for people to download and read. But how do you view DeFi, and what is your outlook for the next quarter and maybe the next year?
Yeah, I mean, really short. We also covered in this quarterly report. I think DeFi is bullish for Ethereum. I think that all of this development going on in Ethereum is great because it's built this giant community around Ethereum. I think a lot of these DeFi platforms are, kind of boom and bust cycles that remind me very much of the ICO bubble of 2017, 2018. I think there's certainly some great technology going on there. I personally have some capital in Ethereum, which is my way of getting exposure to DeFi. Because I'm worried about a lot of security concerns, and I'm also very worried, following the BitMEX news about the regulatory risk of a lot of these, developers and platforms violating the Bank Secrecy Act in the U.S. So that's kind of my perspective. It's not necessarily a bullish or bearish one; it's more of a wait and see. What about yourself?
I'm pretty excited about decentralized finance in general, and I think that I'm looking forward for more projects to come in with better UI, better kind of an easy way to get into the space. And I feel that at the end of the day, this will transform the financial services market. And I'm very excited about this. Maybe not next year, maybe not in the next 2 years, but over the next 3 to 5 years, I think it has the chance of really change how people access credit, access insurance, access remittance services, and all sorts of other financial services that are currently are built on kind of legacy software and all sorts of gatekeepers. So I'm excited, and I think we need to wrap up. So I just wanted to really thank you, Josh, for going over this report. And again, if anybody is interested, it's available. Just Google the TAI Etoro quarterly report, and you'll be able to download it.
Great. Thanks a lot, guys.
Thank you, everyone.